Money, power, politics. And it was a mixed day for markets. The Dow finished the day up just 56 points, while the S&P slipped from recent highs. Tech stocks slumped, and oil prices, you guessed it, surged. As of today, the average price for a gallon of gas still sits around $4.50. That is a lot. And the pain at the pump is finally showing up in our government data. According to the Bureau of Labor Statistics, the CPI, Consumer Price Index, rose nearly 4% in April from a year ago. Guess why? Energy prices. That is the fastest rate we have seen in 3 years. And inflation pressure is not just showing up at the gas pump, it's everywhere, across housing, food, retail, and more. But again, the president does not seem too worried about it.
When you're negotiating with Iran, Mr. President, to what extent are American financial situations motivating you to make a deal?
Not even a little bit. The only thing that matters when I'm talking about Iran, they can't have a nuclear weapon. I don't think about American financial situation. I don't think about anybody.
But to be clear, when we struck Iran, the president said Iran was building a nuclear bomb. It would be done in 2 weeks. And when it was going to be done, they were going to use it. There's no evidence backing up that claim. He continues to repeat it. Brendan Greeley joins us now. He's a contributing editor for the Financial Times, and Dan Nathan, CNBC contributor and co-host of the Risk Reversal podcast. And Brendan has a book coming out days from now called
The Almighty Dollar, 500 Years, the World's Most Powerful Money.
It's like the new 50 Shades of Grey, but money. Okay. I want to start with this new data. What does it tell us about our economy right now?
I think it tells us a lot of what we already knew, right? So we've had this inflation that's been very persistent over the last kind of 4 years. We got to a point in 2022 where it was like 9%, that CPI that you just spoke to. And that was one of the reasons why the Fed had to start raising interest rates. So here we are now, 4 years on, and we have a 3.8% inflation rate. I mean, think about that. That's like a little less than half of where we were in 2022. And it makes the Fed's job really difficult right now, because obviously we know the president wants interest rates to go lower, but what do we do when we have persistent inflation? We have to actually slow it down. And one of the reasons that, we have this upward bias towards rates right now, and that's been happening in the markets because the market participants don't think the new Fed chair is going to be able to lower interest rates. It will only make the inflation picture worse.
Kevin Warsh, what's a girl to do? He's inching closer to getting this seat.
Oh my God.
And we know the pressure he's under from Trump.
Absolutely. We're going to end up with the exact same thing happening in a year. We're going to have inflation that the Fed can't control, because the kind of inflation we're getting right now, the problem is the kind of inflation the Fed can't really do anything about. This is one of those data releases where the more you look at it, the worse it gets, because we also have ways of stripping out, inflation in gas, and we know why that's happening. Food prices, right? They closely track the price of gas as well. But when you look at other stuff, once you strip that out, it's rising as well. Prices are going up across the board. There are like 6 different ways to slice this data. They all show the same thing, a price increase. Even worse, for the first time in 3 years, inflation is going up higher than wages. And that's much worse than wages at the bottom.
Okay, but now the Supreme Court is still waiting to decide whether or not Trump can remove Lisa Cook from the Fed.
Right.
Let's say he can. Let's say the president is able to stock the Fed with every single person he wants on it. Then where does it leave us, right? Even if he gets everybody, even if he gets them to lower rates, he cannot control the economy, nor can the Fed.
Well, I think it comes down to what the partnership might be with the U.S. Treasury, right? And there's been some inclination that they're looking to kind of take some of those independence away from the Fed, which is something that's existed, I think, for like 70 or 80 years or so. And it seems like the White House really does want to use the Fed as an arm of their policymaking, right? And that's not something that's normally happened. So I just think you have the opportunity or the potential for mistakes to be made, like big mistakes to be made. And, when you think about inflation, if you start cutting interest rates and it just stokes inflation, then it becomes embedded, right? The way consumers think about it, the way companies think about it. And so it really has the potential to get into this like stagflationary environment. And to Brennan's point about wages not growing as fast as inflation, that's a bit of a witch's brew if you think about it. Politically, definitely. But if he's out there saying, I'm not worried about the economy, I'm not worried about consumers right now, that's going to be a real problem over the course of this summer.
I think even if he were to be given the power to fire Lisa Cook, which I don't think he will be, the Supreme Court has said is unlikely. However, even if he were to be given that power, he would have a hard time controlling the Fed in the way that he would like to. One of the fascinating things about 2 administrations of Donald Trump is that the only place where the Senate Republicans rein him in is in his selections for the Fed. When you look at Trump nominees to the Fed, they're all institutionalists. They all sort of protect the company. Mickey Bowman, Kevin Warsh, even he is a Fed company guy, and so
he wants to change a lot of things.
He has a lot of things that he wants to change. If we're just talking about interest rates, he's going to have a hard time convincing the rest of the FOMC to do something truly dangerous. He has a lot of discretion at the Fed to do things like change their research agenda, start talking about the balance sheet. There's a lot that he can do there.
Okay, that's boring.
Yeah.
New topic. Okay, Trump is headed to China along with dozens of executives from major U.S. companies, including NVIDIA CEO Jensen Huang. He was not on the list, but tonight the chipmaker confirmed to our colleagues at CNBC that he will be there. I love this. After seeing the media coverage of Huang's absence from the delegation, Trump called him and said, "I want you to come." I mean, what is your even take on this back and forth? First of all, it proves that Trump isn't just watching right-wing media, that he's actually paying attention. Oh, maybe I should have invited that guy.
I'm pretty sure that Jensen Huang was one of the only big tech executives that did not give to the inauguration and wasn't at the inauguration. Now, he's developed a very close relationship with Trump. He wanted to get the export ability of his chips, even if they're lower quality chips, are the ones that we're using here to train our models of U.S. companies. And right now, I mean, the president did a pretty gangster thing, right? He kind of put a 25% VIG on. He said, yes, you can sell these lower-end chips to China, but we're going to take a 25% cut. That happened about 6 months ago.
Gangster, that's a great move for a president of the United States.
Right? I mean, a little bit. But the Chinese have pushed back.
I'm joking. He's serious. Just to
but the Chinese have not allowed their companies to buy the chips. And it goes back to leverage, right? So we have all these company CEOs going with the president. They all want to do deals in China. Boeing wants to sell more jets to China.
Sure.
Elon wants to sell more EVs in China. I mean, the list goes on. Apple.
How?
Yeah.
What is his leverage in this negotiation? What is he going to China? What is he offering? What pressure is he going to remove? Okay.
So he offers up Taiwan a little bit. And here's the thing that,
you think that's the deal?
I think there's the potential for it. He doesn't seem to care about it one way or another.
No, that's clear.
You know what I mean? So, like, if you think about it, right, if this President Xi is going to make some concessions, I mean, they kind of won the trade war. If you go back a year, for all intents and purposes, the leverage that you're talking about is rare earths, them buying our soybeans, all that sort of stuff. I mean, we know what they are. But at the end of the day, all of those company CEOs, if Taiwan actually comes under some sort of blockade or something from China, they all rely on the chips that are made in Taiwan at Taiwan Semi. 85% of the chips that we need to go into all of the electronics, the defense apparatus, all over, I mean, the list goes on and on. But they're all made there.
Here's what's driving me crazy about this whole conversation, which is that in 2017, when we started talking about Trump and trade, the big concern about China was that they were going to be allowed to move up the value chain and sell cars and electronics. What have they done? They're the world-leading exporter of cars and solar panels. So they've dominated those markets. The thing we said we were going to prevent them from doing with trade wars, we didn't get it done. It didn't work. I don't understand what leverage
they're selling those
them at
things to other places in the U.S. I mean, that's one of the things that really happened over the last year. China's exports are greater than they were when we started the trade war going back a year ago. But now, where are they selling their stuff? They're selling them to Europe. They're selling them to South America, that sort of thing.
They have all these new trading partners.
Yeah, I mean, and even our allies. I mean, when you think about it, I mean, we have Canada, we have European leaders making deals, going to China and doing those sorts of things. I think Trump looks around and says, well, I want to do those deals. And I don't think, to your point, I don't think we have a lot of leverage right now.
Quickly before we go, according to the New York Times, China has now approached Anthropic with a request to access their newest AI. Anthropic refused. The Trump administration reportedly viewed this as another sign that Beijing will do anything to win the AI race. To that, I kind of say no duh. But what do you think?
It is shocking what this model can do. Banks, the NSA, all sorts of organizations are frantically trying to create patches. It's incomparably faster than human beings were at finding vulnerabilities in computer systems. Banks are terrified right now, frantically trying to make sure that this model, that they can at least patch what this model finds before it leaks. Because the broader you open up the circle of people who are allowed to look at this model and perhaps find vulnerabilities in their own systems, the more likely you make it that it's going to leak. And so we're in a race right now